XRP holders just got confirmation that the XRP ledger and RLUSD are now sitting as core infrastructure for 24/7 institutional markets. This is for hedge funds and prime brokers. We're talking about Wallstreet 2.0. They're not going to go back to the old system because the new system is truly game changing, and it does take an asset like XRP to help power this. There's a brand new interview with Mike Higgins. He's the CEO of Ripple Prime, and he is helping us better understand how XRP is truly changing the game for Wall Street right now. I want to get into the most talked about clips that are floating around on X that people are sharing consistently, and how this is going to impact XRP holders at the end of the day. I do have some other XRP related information that's brand new that I do want to get to, but we got to go with the best information first, as always. It's so nice to see you. I hope you're having a good Monday. Ripple Prime was named Prime Broker of the Year by Specialist Markets at the Hedge Week European Markets Awards. So that was a big deal going into this interview. And once you hear this stuff, you can't unhear it. Let me drop this.
Markets is legacy technology. They don't understand things like, calendar days. They're just business days, let alone 24 hours a day. And so to really be in, the Wallstreet 2.0, which is, what digital assets largely are rewiring how Wall Street works. On the prime brokerage side, you needed to have a modern technology stack. And so from the very onset of building Ripple Prime, we had that view in mind. And so that then moves into the question around stablecoins, right? So being able to move collateral or value around 24/7 on, XRPL as the chain unlocks a lot of things. And I'll give you one that I don't think folks think enough about. But two kind of related, but the second part I think will hopefully be interesting. The first is just being able to meet collateral calls or margin calls out of banking hours changes what you can trade and how long you can trade those for. And so if you're a trading firm or a clearing firm, instead of now 225 days a year, business days, you're now trading 365 and 24 hours a day. And so if you're an investor in this business, now all of a sudden the TAM or the addressable market just grew by a significant amount of hours and days. So stablecoins are the lead in that, because if you're not able to move collateral, then you can't really trade or risk manage on the weekend. The second one that folks don't think about enough is what we call the MPOR, the margin period of risk. And so the way risk management works is you understand a client's positions and what they're trading. And then if they need to top up margin, you calibrate that by when the banking hours are open or the weekends. Right. And so now that you've shrunk that margin period of risk, because folks can use stable coins to top up collateral, the margin requirements generally come better. And therefore that's passed back to the client, i.e. making all of the asset classes better, faster, cheaper, or more efficient. And so that, again, if you're a trading firm, trading proprietary capital, you make more money. If you're an investor in a hedge fund, hopefully the fund returns better.
Better, faster, cheaper, more efficient, going from 225 days to 365 days, 24/7, 365, where most prime brokers were worried about calendar days and banking hours. Using XRP and RLUSD as core infrastructure here, it's open all day long, 24/7, never closes, even on holidays. And that's the new system that we're moving to. And it opens up all of this total addressable market that Mike was just talking about, how it's going to be much larger than people expected. Now, I just wanted to get some additional context here, because I know some people might still be trying to struggle about what Ripple Prime is and how it changes. So before I get to the next clip, let me just give you some additional information. Ripple Prime changes the game by taking a full stack regulated prime brokerage and plugging it directly into the XRP ledger and using XRP for settlement rails. And the DTCC NSCC infrastructure, instead of sitting outside legacy systems, can separate crypto as a sidecar. Ripple Prime is rebranded from Hidden Road Business, a global multi-asset prime broker for FX derivatives, credit, and digital assets, now powered by Ripple. It gives institutions a single account to trade across multiple venues venues where Ripple provides custody, liquidity, and settlement rails via the XRP ledger. So no matter what anyone tells you, this is all built on the XRP ledger. Traditional prime brokers sit between funds and venues, extending credit, aggregating execution, and settling via legacy rails like the DTCC, NSCC, correspondent banks, and SWIFT. This is why Ripple is plugged into the DTCC, because its clients are moving value in between it. Settlement is fragmented by asset class and venue. Separate pipes are for FX, separate pipes for bonds, separate pipes for swaps, equities, and commodities, with multiple custodians and days-long funding as reconciliation cycles. Now, the direct hook into Wallstreet plumbing here, Hidden Road, now Ripple Prime, secured access to core US clearing pipes like the FICC netting and NSCC before the acquisition. Ripple Prime appears in the NSCC DTCC infrastructure, giving Ripple an operational bridge into the heart of post-trade clearing. And we always talk about DTCC. They have $114 trillion worth of assets. They process $4.7 quadrillion. And that's how Ripple is now plugged into the DTCC. It is through Ripple Prime. Now, the XRP ledger as a post-trade rail, not just a payment rail, with the NSCC connectivity, Ripple can start shifting portions of institutional post-trade volume, net obligations, collateral movements, and margin calls onto the XRP ledger for faster and cheaper settlement. So that's how that is why the benefits are going to be for institutions to use Ripple solutions, because it's going to be faster, cheaper, more efficient, and it's going to be 24/7. XRP's low fees, sub-second finality constraints with legacy rails that batch and settle over days, creating intraday credit exposure and collateral drag. Ripple Prime uses prime broker style credit intermediation, net settlement, and collateral management so clients can trade across multiple venues without pre-funding each other. So it gets rid of kind of the pre-funding nostro vostro. Instead of parking idle capital at every exchange or broker, institutions can net exposures and move collateral in near real time. So that gives you a good understanding of how XRP fits into all this and what Ripple Prime is actually doing. Now let's get back to the clips.
I want to talk to you a bit more maybe about RLUSD, which is Ripple's stablecoin, and how it fits into the Prime strategy. I mean, the team has been integrating it as a settlement layer and collateral asset across venues. What does a stablecoin native Prime brokerage make possible that a traditional one can't? And we also just pulled up this chart here that we put together kind of the growth of RLUSD supply and really how it's been expanding since, let's say, last year, give or take. Yeah.
Yeah. I mean, you can see the charts up and to the right? And so I'll kind of, I think the math speaks for itself, or the data speaks for itself, I should say.
The reason I wanted to show this clip was look at RLUSD on the XRP ledger. See how it has exploded over time. You guys remember in the early days when RLUSD launched that a lot of people were frustrated that most RLUSD was on Ethereum. You see how over time it shifted more towards the XRP ledger? That's because when RLUSD launched, most stablecoins are on Ethereum. That's where a lot of DeFi and a lot of liquidity were. And so Ripple needed to be positioned where most of the liquidity is. Now that the XRP ledger has expanded, with use cases, people building and real world assets, you're seeing more demand on the XRP ledger. And that's why you've seen this incredible growth around RLUSD on the XRP. I'd imagine this is going to continue as Ripple really wants to focus everything around the XRP ledger, but you also need to have Ethereum, and they're going to have other like layer 2s that are going to be involved. And we did talk about that with Wormhole and NTT bringing XRP and RLUSD to other chains. I don't want to get you too lost here though. I do want to get into this clip. This is a great clip from Saul. If JPY, if the yen is liquid to XRP, and the Great British Pound is liquid to XRP, and US dollar is liquid to XRP, then the Japanese yen, the Great British Pound, and US dollar are all liquid to each other through XRP. XRP is the great common money role because it is neutral.
But like other asset classes, there's lots of correlation between it. I'll give you a really simple example. You can buy and sell XRP against dollars. You can buy and sell XRP against Japanese yen or British pounds here in the UK or Europe, right? That adds a foreign exchange component, because if you're market making, as an example, XRP dollars to one client and XRP yen to another client, then you end up with a dollar yen platform. So it would be disruptive. It would be capital inefficient if you had to do your FX business separate to your digital asset business. And so these are some of the requirements we had early on from our clients to, again, do it all in a single location.
Listen, it's going to be easier for clients when they can do FX through Ripple Prime, basically into any currency, into any other currency, and using XRP as that bridge, that pool of liquidity in the middle. There is going to be other clips that come from this interview that I'm going to play in the video too, but I just wanted to highlight those 3 pieces of information. It really does show us how Wallstreet 2.0 is kind of coming into focus and what role XRP is going to play in that. If we can start moving trillions of dollars per day in FX through Ripple Prime, I mean, think about the benefits there. I mean, we are talking about $3 trillion a year. Obviously, you know, if we're talking about moving $3 trillion a day, that's still pretty far away, but I think that's kind of the overall goal of where you want to get to. FX is about 7.5 trillion in total per day. If Ripple can start moving 10 to 15% of that, this is where I get those numbers from. All right, I did want to get into this other part here. We did have a few people like Vet speak out. It says, interesting interview with Mike from Ripple Prime today. You can manage collateral 24/7 outside banking hours by using stablecoins like RLUSD and XRP, reduces margin period of risk and increases capital efficiency as better margin requirements are passed to the customer. So even more benefits are passed to the clients. And I think that's the biggest impact here. Now, there was this clip that a lot of people are talking about, kind of shifting gears here. The former CFTC acting chair, Caroline Pham, citing 28 trillion in raw stablecoin volume in the first quarter of 2026. We're pacing over $100 trillion in stablecoin volume this year alone. And that's as markets are kind of very quiet right now, as most retail traders have maybe positioned into other things.
Even just in Q1 of 2026, we've had 28 trillion in volume in stablecoins alone. This is one quarter.
The crypto industry has, let me put this way, the crypto industry has a long history of own goals.
Yeah.
We are the masters of shooting ourselves in the foot.
Yeah. There's 2 things that I feel like the industry would really help themselves a lot if they maybe recalibrated or reframed the narrative. This idea that DeFi is incompatible with KYC and AML is just a fallacy.
Right.
I think it would be better if instead of saying, oh, we're going to disrupt this, we're going to blow everything up and create a whole brand new financial system. Banking and markets have been around for like hundreds, thousands of years. We're not really going to blow everything up and start all over again. So if we actually just looked at this as modernization, why is this so different from going from paper to computers to now blockchain, which is really just decentralized computing anyway? I came out on like January 2nd or January 3rd, and I said 2026 is going to be the year of institutional adoption. It's like, Caroline, why are you saying that? Because I've been working on it since 2018.
Actually, it's interesting. It's almost like the industry has 2.5 years to become too big to fail.
When you have institutional adoption coming in, we're talking like not just millions, not just billions, not just trillions, maybe quadrillions. You can't put that genie back in the bottle. Blockchain technology is not going away. Stablecoins are not going away. Bitcoin as an asset class is not going away. If you have a Bitcoin in every brokerage account, you can't undo that.
You remember how crypto used to be, we're going to fight the system, and a company in the early days says, you know, we're going to partner with the system. It's funny how Ripple now has transitioned to like the company that everybody is trying to mimic and follow. They knew from day one that they weren't going to be able to replace everything. They needed to integrate with the existing system and change it from within. And that's why I was smiling during that clip. The people at Ripple are just so far ahead of the rest of the market. It's just not even, it's not even close. It's not even funny. And I don't know listen, 100 trillion this year. What do you think it's going to be next year or 2 years or 5 years from now? Right? Stablecoins are going to go from 200 trillion, 300 trillion. I mean, how big is this going to get? You throw in agentic commerce, that's supposed to be 183 trillion worth of payments, right? You're talking about a whole, $500 trillion worth of payments over the next, maybe 5 years happening on blockchain per year. And if the XRP ledger can get a large share of that, what is that going to mean for XRP specifically? XRP is the #1 traded asset on Upbit right now. Once again, Korean exchanges, XRP, most traded asset. Really incredible to see that. Cassie Trades, if you're wondering what's going on with XRP, she does a great job. I do recommend you to follow her. The next XRP move could confirm everything. During Friday's live stream, I mapped out a potential 5-wave down to the 87 cent that fibs out perfectly at the time. I said wave 1 looked complete and XRP should come up for wave 2. I still believe that we are seeing that now. The key level is $1.22, the typical 0.618 retracement target for wave 2. If XRP starts showing exhaustion there, it keeps the entire plan aligned for continuation to 87 cents. A break above $1.30 invalidates this specific map plan and forces a recount. However, the 87 cent target isn't fully invalidated until XRP breaks above $1.65 and flips it into support. What's also interesting is the timing. This structure projects the final low into late June, early July, similar to what we witnessed last year before the all-time high was reached in mid-July. So June, historically rough time for XRP. July, historically freaking amazing. So are we going to play that out? Is it going to continue? Are we going to revisit, maybe 90 cents, 87 cents like she's saying here? Is it a possibility? Absolutely. Do we want to see it happen? No, we don't. But that could be the final move down before the final move up. All right, I'm going to leave it there. I know that's a lot to go over. We went through Prime brokerage. We're talking about stablecoins. We're talking about XRP chart. I appreciate you. It is Monday. Please support the content. Like, share, comment below. Thank you so much. It's an honor. I'll see you next time. Aloha.